Hey everyone, and welcome to Earnings Cheat Sheet for Friday, July 25th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And boy, oh boy, Ed, is it a big week? So, what do you have on tap for us?
Yeah, I don't know if it's the biggest week, but it feels like the biggest week in terms of a lot of the growth stocks. We're going to take a look at Microsoft, Meta, and Amazon, and a bunch of others.
All right, well, let's start with Microsoft, which is scheduled to release fiscal Q4 earnings on Wednesday, July 30th. Earnings for the tech giant are expected to rise 14% to 337 per share, and revenue is seen climbing 14% to $73.79 billion. And here's why we're watching Microsoft. The story continues to be AI growth from Microsoft's Azure cloud infrastructure business, as well as its Copilot AI assistants for software apps. We'll also be watching AI monetization and capital spending. I think we'll find that's a theme throughout this episode, Ed. And,
Yeah.
Microsoft was really seen as one of the big winners of this artificial intelligence mega trend. But it feels like the software giant still has something to prove to investors. For fiscal Q4, Microsoft predicted Azure growth of 34 to 35%. And the company has kind of been saying that it's been supply constrained for these cloud services. So, what does that mean in terms of Microsoft stock performance? And what are your thoughts heading into earnings?
Yeah, I think a lot of these, and just in general, I think a lot of them don't have enough chips, and they want more, which has been great news for Nvidia and others, which is also part of the importance. All these companies hugely important for the entire AI sector. But yes, basically it comes down to AI, even though the bulk of their revenue may still be from other things, but Azure, cloud computing is still huge, and AI is a big part of it. So the question is, in Copilot, can you monetize AI enough to justify the massive investments that they're doing? That's always the question that, Google came out and did report strong Google Cloud numbers, this week, and also raised how much they're going to spend. So what will that do for Microsoft and obviously the others we'll see here. But yes, so that's the real thing. And then the outlook, and the outlook tends to come an hour later. So Microsoft may do one thing or another, and then an hour later, all of a sudden the stock will shift direction or race gains or race losses. So definitely be aware of that.
So important for investors to be on their toes. But let's look at the chart, Ed, because we saw Microsoft hit a record high here back on July 18th. It broke out of this 47-week consolidation pattern with a buy point of 44.6835 on June 5th. And, it's extended beyond this buy zone. Looked like it tried to maybe flirt with the 21-day line here recently. But what are your thoughts on the technical action here? And what would you like to see set up?
Yeah, it's definitely improved, and you can see we had been lagging for a while, late last year, and for quite even before the DeepSeek issues hit in January, and then we had that sort of brief sell-off in the market. But it's rebounded a little bit like Nvidia, which had gone sideways for quite a while. And Microsoft saw it went sideways, came back, and now has roared back, showing again it's part of that. It can, as AI returns. I'm not sure what you can do with this. I mean, there were opportunities maybe to buy it here and there as it gapped up or when it cleared some areas, but it's pretty extended. It's gone on a good run. I think it needs to pull back, come back to the 50-day line, form a new base, something along those lines. Uh, but that's what we need to do before I think investors want to get in there again.
And then we're on the weekly chart here, Ed. And as you mentioned, maybe looked like there was a 3 weeks tight area back in here that could have offered a chance to maybe enter add on. But a really great run from Microsoft. Any thoughts on the fundamentals that you're seeing?
This is a very consistent, performer. I mean, it's so tends to have, and its software companies often are, at least mature ones. I mean, it's like steady revenue growth, subscriptions, and other things. So not a shocker. Low double digits. Can that continue? That's what you want to see, that kind of thing. So you have to know there how much can it go. It goes on these runs, and then sometimes it goes on long sideways or even declines because it's just hard to, if you think ultimately earnings drive the stock, if you get, a 15% bump in earnings, well, there's only so far the stock can go on that. So there was a punch up earlier in some prior years. But so I think that strong growth, solid growth, but it's also gone on a long run. So maybe it'll need to rest, but we'll see.
All right, Ed. Well, let's head on over to Meta, which is scheduled to report Q2 earnings also on Wednesday, July 30th. Earnings for the social media company are expected to rise 14% to 586 per share, and revenue is projected to climb 15% to $44.76 billion. And here's why we're watching Meta. We'll be focusing on a lot of AI CapEx spending and other costs and how Meta expects to make those investments back. And Meta's advertising business better keep humming, as you mentioned, Ed. And again, it's all about that AI monetization and capital spending. And Meta's AI offensive really going aggressively here to get a chunk of that $1 trillion advertising market. The company is reportedly offering $100 million payout packages to poach or lure top researchers from OpenAI and Apple. And we had a great piece come out recently taking a look at Meta's business strategy here, Ed. So break down for us what's going on with Meta and what you're interested to see as earnings come up.
I mean, it's the same thing. I know it's the same theme. It's just looking for that AI and can the advertising, even AI, not maybe not AI driven tremendously, but right now, are they going to generate enough money right now to pay for things? And will that AI pay off? That this huge hiring spree, the huge capital spend, one imagines that their capital spending will be pretty strong. I mean, obviously it'll be strong, but it might even go higher given how much it's spending just on people. And that's just something to watch for. Because like a few years ago, Meta got in trouble when they spent tons of money on the metaverse, and then people realized, well, nobody wants to put avatars and attend meetings. I mean, it just wasn't. But AI is people feel more confident about that, So can they do that? Really drive growth. The growth is definitely slowing down, whereas Microsoft is more steady, 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 not tremendous. Meta is now slowing down quite a bit toward maybe what you might think is steady, steady, but it's definitely a downshift after some big years. So that's just something that investors may need to calibrate.
And we're on the daily chart here, Ed, and it's slowing down, but the stock is up about 21% year to date. And we saw a slump in the spring when there was concerns about tariffs, but Meta stock has really rallied here since the end of April. Broke out of this cup with handle base with a 662.67 buy point early in June. So again, what are your thoughts here on the technical action? It looks like it may be testing the 21-day line, but what would you like to see happen with Meta before earnings?
Yeah, I mean, and you made a good point about the tariffs, because yes, while DeepSeek had an issue, tariffs were an impact. And you said, well, why? Meta, why would you care? It's social network. Because a huge share of their advertising was coming from Temu and a couple other Chinese retailers, and they were cutting back. Now, some of that's come back, so some of those fears have come off. Yeah, there was definitely that buy point around 662. You could argue there was an alternate handle that sort of formed just around 700, like, just a few weeks later. And so there was that, and then it sort of came back and erased those gains, but it found support there. So now it's sort of forming another consolidation around the top of this base. You could have argued, when it was moving, earlier this particular day, that it was breaking a trend line or what have you. But what I would like to see is it not do anything for a few days and then move. And then I think, given where it's consolidated for the last several weeks, that, if it punched higher from about these levels on earnings, there could be a buying opportunity depending on how strong it is. So that's something that this one's potentially actionable in there. I don't think it's particularly actionable right now because of earnings coming so soon. But this is definitely one to watch.
And if you bought back in here and during the breakout or even prior to that, it seems like you have a little bit of a cushion headed into earnings. So how would you approach either holding or perhaps maybe selling, depending on what earnings say?
Well, it depends. This is obviously a lot of investor taste. It's easy to say, but your concentration. If you have all of your stocks and you're fully invested and it's all in Meta, you might want to take a little bit of a partial profit. I mean, it's like if this is one of like 10, 15 stocks that you own, and it's not that big of a position, it's like, well, okay, worst thing happens. Okay, it could fall 10%. I might actually be down. So there's a thing, and you could also, so it does depend on what your risk tolerance is, how much your concentration is. Yeah, this is probably at least on the edge of where you could say I could let it ride if you bought it around there, but because you're probably up like 7, 8%. Um, but uh, but if you bought more recently, that's a different question. Like if you bought around 700, or if you or something like that, then you might be saying, well, I don't really have a cushion. And then you ask like, well, do you really want to go into it? Obviously you can do whatever you want. You buy an option to hedge, you can take a partial profit, but that's a little bit trickier situation.
And just switching over to the weekly here quickly, Ed, and as you mentioned, we do see this growth here slowing in terms of earnings. But any other thoughts on the fundamentals before we move on?
Yeah, I think it's just like, can the fundamentals, will we, I don't think people will be too excited to see earnings actual fall. And I know that's what the estimates are, but I bet investors don't really want to hear that, or if it's going to, that it's going to turn around pretty quickly. I think they would, that would be, they would definitely like to see growth continue for this company.
Oh, wouldn't we all?
Yeah.
Well, let's look at Amazon then, which reports earnings on Thursday, July 31st. The e-commerce giant is expected to see Q2 earnings rise 5% to 126 per share, and revenue is expected to climb 10% to $162.14 billion. And here's why we're watching Amazon. The focus has shifted from those tariffs and how they're impacting retail back to AWS and AI. Will artificial intelligence rev up AWS growth soon with more advanced NVIDIA chips and potentially some of those in-house Amazon chips coming to ease capacity constraints? And again, as we keep mentioning, AI monetization and capital spending, that is going to be the big focus coming next week. And Ed, we've seen analysts kind of taking a hard look at Amazon Web Services cloud business. There's a big battle going on for this enterprise artificial intelligence uh, cloud infrastructure spending. And on the retail side, we have Walmart kind of trying to take a little bit of market share from Amazon. So, what are your thoughts with the Jeff Bezos company, and what would you like to see ahead of earnings?
Yeah, it'll be interesting to see. I mean, I'm interested as a person, just as a news editor and as a personal shopper, because there's been reports about prices rising. Will they talk about that? They've quietly been raising prices on the low end, but that's on the retail. That may not matter too much, and they're probably trying to balance it out. That's their money is basically made in Amazon Web Services, and they do have a growing advertising business. That's not insignificant for them. Amazon Web Services is still the giant, but it's not growing nearly as fast as Azure or Google Cloud, and Azure's starting to catch up. It's getting closer to that level. So want to see if they can get any acceleration there. Again, can this one has more growth, more like Microsoft, or maybe even a little better, though it can be volatile. There can be some big swings here and there. So how that outlook comes in, because sometimes, and they give pretty wide outlooks too. Yeah, this one has been acting well. Not a super performer, but showing some strength in the last few months.
And we're looking at the daily chart here, Ed. And as you mentioned, really bouncing back from the last 2 months here. But essentially, up slightly on the year. It is trailing the S&P 500. And we did see this breakout back here out of a cup with handle base to 1484 buy point, but it looks extended from that buy zone right now. So any thoughts with the technical action?
Yeah, and maybe it's like extended, like if you wanted to use 218 or whatever that is, like, because that sort of became sort of an alternate handle the way the other one acted. But even from that, it'd be a little extended. If it could gradually pull back to say the 10-week line or something like that, and then probably, you wouldn't want to see it just plunge 10% on earnings. You wouldn't be like, aha, it's a bounce off the 10-week line or whatever, but something more gradual. So that seems like it might take some time. I mean, there is a 3 weeks type, but it was sort of wedging up. It didn't really feel like it is a great place to add there, and earnings were coming up in any case. So probably needs to take some time after earnings and to see what develops there.
All right, Ed. Well, those were some of the big names on our radar. But as we mentioned earlier, lots of stocks reporting next week. We'll start with Apple. It seems like investors have really soured on Apple this year. They've kind of been lagging with AI intelligence, and date the stock is down about 14.5%. So it's in this consolidation here, Ed, with a 260.10 official buy point here on Market Surge. But what are your thoughts with the chart, and what would you like to hear from Apple on this earnings call?
I mean, one of the issues is there's not like until there's the next big product, the next big iPhone is the next big driver. I mean, there's always services, there's this and that, but they've struggled in AI, and I don't know. I don't think there's any real signs that that's going to be from this call. We're going to hear much. So their AI efforts just haven't really panned out so far. Like so that's a big concern. The iPhone just doesn't seem like it's doing particularly well. The growth, there's only so much. If it's not that innovative, it's hard to drive that. What's going to be that big replacement cycle? It faces a lot of competition, especially in China. So it's sort of like, it doesn't. It's not growing. It's hard to get excited about the future. I'm not saying it's not like anything's terrible or anything. It's just sort of like, well, it's got a decent valuation, and how much can it grow is there concerns. People might be fearing that there's downside risk, like on that front. So I think that's the issue there. It needs to get above the 200-day line, maybe substantially, you know, then form a handle, decent handle, maybe 240 would be great, maybe even a new base, something like that. Just needs time, but I think we need to get a sense that growth is going to pick up a little bit, and the growth story is still there.
And let's look at Spotify, which is due on July 29th. And again, this one, Ed, scored a price target hike earlier in the month from an analyst. They seem really excited about their pricing power. And we saw on June 27th, Spotify hit that high of 785. But what are your thoughts here? It looks like it's just below the 50-day line right now. But thoughts on the chart?
Yeah, I mean, it fell through it partly because it's sort of maybe some sympathy with Netflix, that subscription type of play. This was trying to bounce back, but look, if it breaks powerfully above the 50-day line, I think people could use that, as sort of like that first test of the 10-week line, 50-day line within after a breakout. Because even though it's come down, the volume is dried up. It hasn't been tremendous, and it did move up, but we'll see. This is the key area. I mean, this is sometimes people want to cheat. I think this is the worst time to cheat, not just because it's earnings, but forget about earnings. But when you buy just below a key resistance level, is like there's not extra there's a little reward if it works because you save maybe 1%, but there's a higher risk of failure. It may just hit the resistance right at that key level. So when you're at a key level or just below a buy point, it's tempting to get in just a little early, but I don't think that you get a lot more risk for a little reward. And so it just seems like waiting to see if it can punch higher on earnings or if it needs some more time.
All right. Well, we have some chip names reporting next week as well. Let's start with Rambus. They have earnings on July 28th. We're still on the weekly here. Looks like it tried to break out of this cup with handle base, but has reversed lower this week. So thoughts here on the chart.
Yeah, I mean, there's a lot of resistance sort of like at the top of that base. You can sort of see there's been a lot of at that whole area. So maybe people will need to use that. They could the on a daily that buy point is probably still valid. It's just come to it. So it's still in a buy zone. Yeah, it's a little messy, in there. So I think the buy point might be, there's different kind of levels that could be in there. Um, so want to see some strength. It could still be out there. But yeah, it's a little messy right around the buy point.
And how about ARM Holdings? They report on July 30th. Thoughts here on the technical action.
It hasn't broken up. This one's a very deep base. And so this one can go on enormous moves. It can go, but either direction. And so I think if it gets above this is a handle there or just or even the short-term high within the handle on earnings, it could be an entry. It's just you have to know this is a big mover, and it's not leading. It's not Nvidia or Broadcom or AMD or Taiwan Semiconductor. Maybe it'll join them, but it's not quite there yet.
And how about Cadence Design Systems? They have earnings on July 28th. This one again attempted a breakout, but has since pulled back slightly, trying to regain that buy point. But what are your thoughts here?
Yeah, some of the messiness in this space is due to there was like Trump basically said you can't sell chip design software, which is what Cadence Design does, to China. and which was a huge. So that sold off. But then it's like, well, never mind, is what it came down to. And so there was some of that back and forth was that. So you can excuse some of the messiness, and it's tightened up a little bit here. Look, if it moves higher from here on earnings, there could be something you do. It is this messy. And if you go to a weekly, you can see that there hasn't been a lot of outperformance. I mean, while it's had great runs in the past, and maybe it could go on another one. It's just that that is an issue, is that it hasn't done particularly well for the past couple of years. So that's just something to keep in mind.
And we have another chip named Qualcomm due on July 30th. Thoughts here, Ed? We're still on the weekly.
Yeah, if it punches above sort of the short-term highs from a few weeks ago, maybe there's something there. Again, the growth store outlook. I mean, next year's not supposed to be as strong, and we're getting late in 2025 for the fiscal 2025. So, will they be decent growth there? Uh, this one isn't been an AI chip play, and you can see the RS line has come down a lot. So,
Better ones in the group to look at then.
better ones in the group, but a lot of the better ones are already extended. That's the way it can be.
All right, well, let's take a look at Robinhood. The brokerage platform reports on July 30th. And this one has been a big winner here recently, surged about 70% after clearing this deep cut base, Ed. And maybe we'd like to see a test of some of these moving averages here, but what are your thoughts with the chart here as earnings approach?
Yeah, it's really extended. It's having a bad week, but it's still an inside week, like because the prior week was so strong, and it's had so many strong weeks. I mean, anybody who bought any kind of reasonable area, is going to have an enormous cushion. So you can always take profits if you want to, if you think, well, I want to do that for whatever reason, but you obviously can hold that otherwise.
Would
So
you be looking at the 10-day line here then as maybe
the
sort
more
of
the
strong
21
as?
day line, because it's tested here, like if it went through that, especially because, even tomorrow, it's probably going to be up 3 or 4 more points. That's how much it's gone up. So I think that would be an area, but people can do different things, and at least a place to start scaling out. You could consider, again, depends on your preference, how your conviction and all those things. This has been doing great. Obviously, Bitcoin, and they're grabbing a lot of business. Their growth is really strong. Eventually, it's supposed to slow down quite a bit. And it's like, that'll be interesting. Will the trajectory slow down as people, because we've not only had all this thing, but we've had all this Bitcoin legislation, all this crypto stuff, da 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 da. Is it finally going to say, are things going to normalize or not? I don't know. So I think that'll be interesting to see if this one then, lowers its trajectory a little bit as a result.
All right, well, let's take a look at a couple credit card names, starting with Visa, which posts on July 29th. Still on the weekly here. This one looks like it's basing with a 375.51 buy point and looking like it's right around that 10-week line.
Yeah, it'll be interesting because these stocks and then some more payment stocks next week. So it's an important area. Visa's right around the 10-week, 50-day line. I suppose if it punches through there, that could provide an early entry on earnings. So there was some messy action, but ultimately this base, the latest base, while there's some up and downs, it is a flat base. It's not that deep ultimately. But you do have to know is that it's had some, breakouts often fail or at least struggle. And the last one's, struggled, then it worked, then it failed. You go back a couple of breakouts. There was back in last September, it sort of barely got over, then it failed, then it set up another again. This time it worked, but it's just, it's trickier than you think. So I think it'd be interesting to see what they have to say about stable coins, about payments. A lot of things are going on, and maybe cross-border travel. So I'll be interested in it. There's a lot of macro and a lot of industry things I'll be interested in too. And probably the same with Mastercard, which I think is also around its 50-day line. Yeah, just so getting above that level on earnings. Again, flat base formed around near the top of 11% as well. They're both 11%. They look messy, but they're not that deep ultimately. The growth has been decent. That's not going to be a wow kind of decent, but and because of its failures, maybe buying around the 50-day lines would be, if you're going to buy it, that would be where you want to do rather than a breakout, because it just feels like they often have a tendency to roll over and at least undercut the traditional buy point. So that might be a safer place to try that out.
And Mastercard reporting on July 31st. Let's look at United Health Group. They have earnings on July 29th. And obviously, this one not performing well, but clearly there's importance with what they have to say on their earnings. So, what will you be paying attention to?
Well, one, they disclosed today that they are facing criminal, Medicare, billing practice issues, and that's been a big reason for the sell-off. They've been wanting a lot of, though, Medicare Advantage, and we've seen a lot of Medicaid health insurers warn on cost increases, but we've also seen that issue with Medicare and Medicare Advantage, and United Health is pretty heavy in Medicare Advantage. So again, there's been changes in it, some of the changes in healthcare over the last few years, even before Trump, but they're all sort of metastasizing over the next few years, that some of that has been difficult. And so can United Health, is there a path forward? Obviously, there's been a lot going on all over the last year, starting with the assassination of a top executive, just all sorts of things that seem to be, and they're struggling with it. This is the first one of those major ones to actually report. And so I think people are interested, but obviously this one, it's going to be a long time before people will be interested in buying this stock, I'd say.
And let's take a look at Booking Holdings, the travel booking platform post earnings on July 29th. This one looks just out of a buy zone, Ed, but thoughts here on the chart and what maybe could possibly set up ahead of earnings?
Yeah, I think there might be a 3 weeks tight, 4 weeks. I'm not sure on this one. So yeah, a few weeks tight, maybe another week by the end of this week. So that I think, given when it's that close to the buy point, I think you can treat that as a place to actually start a position potentially. I mean, assuming it's within range, as opposed to often 3 weeks tights are way extended, and that's just a place to add a few shares rather than start. So that's when, like, this has been solid. I mean, this has been a solid performance, decent growth. Some people, while there's a lot of travel issues here, a lot of their booking is in Europe. So booking actually is fairly concentrated in Europe. So that helps them because a lot of US focused travel things are facing, there's just been a decline in travel to the US. But this is escaping that. The 10-week line is sort of catching up. There's a lot of nice things about that, sort of consolidating tightly, 10-week line catching up, solid growth performer. So, that would be the thing. It's like, it's supposedly there's going to be like a double-digit growth in the revenue is going to maybe maybe stop soon, but it's been a solid performer, and yeah, might be an opportunity here on earnings.
Well, if we're going to take a trip, Ed, we need a plane to get there. So let's check on Boeing, which is due on July 29th. And this one seems like it's rebounding, breaking out of a double bottom base with a 184.40 buy point. So thoughts here. It looks like it may be in that profit taking zone if you were in it. But what do you see on this chart?
Yeah, and even if you bought it like more recently off the 10-week line or off this mini sort of really violent consolidation, it's sort of probably up there. Uh, You know, some people might, because it's that 20% move, you could choose to take some partial profits heading into earnings, because often stocks will get up there and then it's like, well, that's when they consolidate or they fall back. So that's a legit place to take that kind of profit. Otherwise, it may just need a new base. I mean, or it could come back to the 10-week line again. I do think on a weekly, it's supposed to, and later this year, finally, and I mean finally, turn a profit, because they have had so many issues, on and on and on. Uh, so if they, turn to profitability, it does seem like jet production has picked up, deliveries are strong, the China concerns are in the background now, that maybe they can finally do that, later this year. Not with this report, maybe not with the next one, but soon. And so that is going to be huge. Are they really going to finally turn that corner?
All right. Well, we have a couple of oil and gas names at the end of the week too, Ed. Let's start with ExxonMobil due on August 1st. Thoughts here on the chart?
There's a few oil and gas names that are performing well, but not really this. And you can look at the relative strength line. This has been struggling for quite a while, actually, even before, the stock's gone sideways really for like almost 3 years. And the market is not. And it's not quite clear what would drive oil prices much higher, or finding, unless there's a spread. So it just doesn't seem like the profits really aren't there. It's just not. So it just seems like, yes, if it punched higher, but so much is driven by price. There's only so much earnings can do, because people know what earnings are probably going to be, because you can see what the prices are on oil and gasoline. So it's even in the energy space, there's probably some more interesting plays, and that's probably the case with
Yeah, let's take a look
Chevron as
on
well.
Chevron, also due August 1st. We're still on the weekly here. Looks like it broke out of a lopsided cup with handle base here, but looks like it's getting above that 40-week moving average. The 50, or I'm sorry, excuse me, the 10-week moving average still catching up here. So thoughts here.
Yeah, I mean, it did break out, but we usually, it's a base that mostly formed below the 200-day line, 40-week line. It's basically at a low, I mean, a multi-year low. So often what we want to see is the stock move above the 200-day line, then set up a base. And like, because this one, there's just so many people right now, like at that whole 160 level, there's just people for a long time who might want to get out at that level. So you can imagine a lot of resistance. So maybe it gets up to 160, 165, forms a base, and then maybe you can move out. But there's just a lot going on. It seems like oil prices are sort of stuck, and there's higher costs on a lot of things. So while technically it might be around a buy point, it doesn't feel like it feels like maybe it needs more work to do before it becomes more enticing.
All right, Ed. Well, thanks so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today with Alyssa Coram. That goes live after the closing bell. And thank you all so much for watching, and we'll see you here next week.